Hi guys, welcome. So today we're talking about refinancing your student loans. And it's funny because when I heard about refinancing student loans, I didn't realize it was a thing. I was like, oh, it is a thing? But it's a large lump sum. So ultimately you're thinking, okay, well, I can refinance my car, I can refinance my mortgage, so why not student loans? So maybe it was only like, it's time now, so these companies were like, well, why not? And I actually heard about it from a friend at my last job where she was like, so a friend of mine refinanced her student loans and she got a really great rate. And I kind of looked at her. I was like, I'm sorry, what? She refinanced her student loans? I'm like, I had no clue this was a thing. So, but when she told me, I kind of became obsessed with figuring out, could I refinance my loans? What could I refinance them for? And then so many other questions that came up from that. So when she told me, I went on vacation actually not too much longer after that. We went to Orlando and I was with my aunt and my sisters, my mom, and I basically was obsessed with looking up different refinancing companies, trying to figure out, okay, how could I pay my loans off faster? How could I send in additional payments? Well, what was the address for where I would send the payment to if I didn't do it online? Like, there were so many questions, so many things. So I'm in the car, we're like driving around, headed to eat, and I'm like, so, okay, if I wanted to send in extra payments, could I do this? And okay, well, what's the address there? And then, like, I had all these questions, and they were like, will you shut up? Like, why are you doing that on vacation? And I'm like, because when I go back home, I got other stuff to do. So this is the perfect time to, take a few minutes here and there, call some people, get some questions answered, write that down. So when I get home, I can go ahead and, well, apply if I need to or whatever. But actually, I ended up in the hotel applying. So I was like, okay, let me go ahead and send this information out because when I get home, then I can send out, the other information that they're asking me for. Because, they ask for quite a few documents when you're looking to apply to these refinancing companies, okay? So I was basically bugging my family at that time, okay? So we're gonna start with just a few things to think about when looking to refinance your student loans, okay? So of course it's some things in regards to like the company reputation, we're looking at the interest rates, the application process, all these things, the documents that you wanna send in. So we're first starting with the company reputation. So the company reputation, honestly, I was looking to find reviews. Because at this time, this was like 2015, I was like, okay, so there are some out there, but I'm like, I haven't heard of them, and barely anybody else has heard of them either. So I'm just like, what information is actually out there? How many people have actually refinanced their student loans? Since now it's a thing, right? So I'm online looking for reviews, and I really suggest you do the same thing because this was 2015, and I want to say they had maybe been around a year or so, and I was like, okay. So there were a few reviews, and so a few people could tell me, okay, they refinanced with this one company and they switched to this other company because they had better interest rates, or they had pretty good luck with finding a great interest rate with this one company. Like, it was just a myriad of it was just a few things where I was like, okay, so people have done this, and at least when you go from company to company, you would kind of see, okay, well, some are only for private loans. Some are for public, standardized, Stafford unsubsidized, all those kind of loans. And I'm like, okay, some only do personal loans. And so it was like all these little things. So it's like, but when you're looking at the reviews and looking on the websites, you can see that you're like, okay, it gives you an idea of where you would want to apply. And then there were some credit card companies that would do it. And I'm like, interesting, because I'm like, I had no idea. But some of those were still particularly private loans or only personal loans. So you really have to be looking at that. And so when you look at the company reputation, you're like, if they're just wet behind the ears and they've only been around 3 months, maybe I don't want to go with them, right? And then there's some of these companies that are scams. I don't really know what else to say. They're scammy, So some of those numbers that start with like 877 and you're like, this seems weird. Or I called one because I was just like, hey, so I'm on the phone like, so tell me something. And I'm like, if you tell me I have to pay a fee, we're gonna have some problems. So turns out they want $2,000 in order to refinance. And I'm like, so why am I going to pay you $2,000, which I could put on my student loans? Like, wait, it doesn't even make sense. It doesn't even line up. You should not have to pay to refinance your loans. You guys hear me? You guys should not have to pay to refinance your student loans, okay? So those 877 numbers and all the, oh, we'll help. They actually call, they still call me now, even after having my loans paid off, telling me, oh, well, we have some new rates and all. I'm like, scammy, because they say they're behind the company, but it's some weird 877 number. And it's like, you can call and you can inquire, and that's fine. But then just know you should not be paying to have your student loans refinanced. They should be doing it, and then, because a lot of them, they try to get you in saying, okay, well, your student loan payment will go down to $300. And I'm like, sure it will. So be mindful, okay? Be mindful, definitely, because you should not be paying for those, okay? And then, of course, I always like to look at the customer service, because if you call and the people have no idea what you're talking about, like at work, I'm just like, the customer service with the, well, we call it ISD, so it's basically the technical support for the hospital. It's sucky. I'm like, why do I call you guys and you have no idea what I'm talking about? That is infuriating, like for real. And I'm like, your job is to know about the computer. So you should know about the happenings of what this machine does. I'm like, please don't make me do these people's drugs and fix this darn computer. I mean, as my cohort would say, she always says, I'm good, but I'm not Jesus, okay? Like, I'm skilled in some areas, and in some areas, I need your help. So this is another area. So when you're talking to someone about your student loans, they need to know what's going on. They should know about the company they work at, okay? They should be able to help you or be able to lead you to someone that can help you. And I'm like, honestly, there's so many too that give you an automated system. And I mean, those are probably hard to find that do not have an automated system. Because I mean, they'll catch you on the phone and they'll be like, so, please press 1 for, the student loan department. Please press 2 for, and I'm like, oh my gosh, please let me talk to a human being. So I'm that person where I'm sitting in the kitchen of my parents' house and I'm like, representative, customer service, like right now. I'm like, representative, a person, a living person. I'm always like, honey, you're not going to get them that way. And I'm like, are you sure? Because I'm like, I'm sure, saying curse words in this phone is not going to help, right? So get somebody who answers the phone. And then it was great that I chose a company that actually had someone that answered the phone every single time. I would call and they would say, hello, this is so-and-so bank. And I'm like, thank God. Like, there was no automated system at all. And I mean, it's hard to say that that's changed, because maybe it has changed now because they've gotten busier and have more clients, this, that, and the other, have more students. But I was so happy just to call and it rang 3 times, let's say, and I would have a person on the other line. And she would know who to lead me to, who to talk to, and it was magnificent, okay? So you want to be able to have that information. So they're informative, you're able to ask them questions, they can lead you to a resource online or help you run through online as well and really gauge how the online format works. And then, of course, the interest rate is a biggie, right? So it gauges how much money you will pay over the life of the loan, right? And they have fixed rates or variable rates. So now, I have to preface this saying, I did choose a variable rate. Don't do that. Like, for real, don't do that. Don't do that, okay? So, that made me so much more worried, okay? Like, so much more worried. I was like, okay, so I chose this variable rate, and they call it a LIBOR. What that stands for again, I forget. You can Google it, feel free. But they have like a 3-month LIBOR, a 1-month LIBOR. But long story short, it says your interest rate will change. If it's 3-month LIBOR, it'll change every 3 months. If it's a 1-month LIBOR, it'll change every 1 month. So my interest rate adjusted slightly every 3 months. So 4 times a year, right? So gratefully, I felt so blessed because at the end of it, I didn't even end up paying more than 4%. And when I first started, I may have to look this up, but it started, oh my goodness, like right around less than 3% or so, which is so much different from my initial rate. My initial rate was upwards of 7%. So that was another reason why I was like, okay, if I choose the variable rate, I'm saying I'm going to pay this loan off as soon as possible. So within the next like 2 years. So I applied 2015, and then by 2017, I had the loans paid off. But it was like I kind of went through a few like questions and a few people because I was like, okay, Dad, what if I chose a variable rate and it kind of fluctuated with the market, and then like if it took me 2 years, would that be enough time to catch it before the rates go up? And of course now the rates are up a little bit, right? And he was kind of like, maybe. And so he said, okay, call your financial advisor, see what he says. And of course at that time, this is that 2015 range, he was kind of like, well, looking at the structure of just like how the markets usually run, he said, you could feasibly have 3 years or so before the market goes up again. So before those interest rates go up again. And am I like, okay, like a full-blown risk taker? I'm like, I always say, I'm like, my sign, I'm a Taurus, right? So I'm like this earth sign. I'm very like stable, and I like things secure, and I like things not to change too much if I can help it, which the world changes all the time, so I change all the time. So, but you get what I mean, right? It's an earth, very stable foundation kind of sign. So to be in a variable interest rate was kind of like, really, Kanisha? Like, really, this is what you want to do with the student loans? These student loans that you've been carrying around for 10 years? So, anyways, to make a long story short, choose a fixed rate, okay? So I had another friend that went with the same company that I did, and she chose a fixed rate. And they give you both of those options when you apply. And so you can see, okay, they give me the years, so 3.25% variable rate over 15 years, or 4% over 20 years. I think her fixed rate was maybe 5% or something like that over the next 15 years. So they give you something to really look at. And so you really have to look at your circumstance. How soon do you think you can pay this off? How, and then you're looking at, well, what was your interest rate before? So there's a lot of things that you can really look at in that aspect. And then some of your loans you won't have to, because some of those loans, your interest rate will already be low. So if your interest rate is super low at like a 3% or a 2%, because some people, yeah, I know that's crazy. Some of the older people that have student loans, they have loans at like 2%. I met a doctor at my last hospital. He's like, oh yeah, I have a few loans at 2%. I mean, he also had like $300,000 now. Let's preface that. But he had loans at like 2%. And I'm like, wow. So which means those, you don't have to refinance. It's okay to leave those out. And I mean, not many of us know that. I don't even know if I realize that. So like when you consolidate, and of course this is a different topic, but when you consolidate your student loans and when you refinance your student loans, you can leave loans out. You hear me? You can leave some loans out. So if the interest rate is already low, you do not have to consolidate it. You do not have to refinance that student loan if it's at a very low interest rate, okay? And I mean, the companies, they don't really tell you that, and sometimes we don't know to ask that, saying, okay, these 4 loans are very low interest rate. They'll be easy to pay off, whatever the case may be. But if it's a low interest rate, it's okay to leave it out of the consolidation, if that's what you're choosing. It's okay to leave it out of the refinancing, okay? I'm trying to think of what else I need to talk about in regards to that. Yes, the interest rate, does it max out? That was really important too, because I mean, if the interest rate goes up to 30%, I mean, I've never seen that, but you don't want it to be to the point where it never maxes out. So like my interest rate maxed out at 9%. So I chose a variable rate, and then my interest rate maxed out. So that's another question that you want to ask. You want to know, okay, because you can leave interest, you can leave loans with lower interest out, and then you want to know, does that interest rate max out, and what is it? So for a fixed rate or for a variable rate, very important, okay? All right. And then of course, if you choose a variable rate, you're trying to figure out, well, you know, you're not trying to figure out. You need them to tell you how often does that interest rate change and decide, are you okay with 3-month LIBOR? So 3 months where every three months that interest rate changes. Okay. So are you all right with that? Okay. And now let's talk about loss of employment. I mean, this was big for me because I'm like, it happens. As much as you want to say, oh, I'll have my job forever and I can pay back these student loans with it. And I'm like, maybe not. Stuff happens, okay? So your loss of employment. So you want to know, okay, what happens if I lose my job? You need to just flat out ask the question because honestly, they're like, oh, well, it's online. You can look it up there. Oh, that means they read it already. And I'm like, maybe the companies make too many assumptions that you know all the information when you don't. You're right, you know, or maybe you missed that on there or didn't think to ask that. So you want to ask, what happens when I lose my job? And some of these companies actually say, okay, we'll give you a year. We give you a year and we assist you in helping you find a job. Because I mean, ultimately they do want to get paid. Please believe me. Okay. So they do want to get paid and you want to know, okay, can I defer my payments? And if I can defer my payments, for what period of time can I defer them? And then what's the maximum number of times I can defer my payments? Okay, so does that make sense? So what happens if I lose my job? Can I defer my payments? For what period of time can I defer my payments? And what's the maximum number of time I can defer my payments, right? Because there may be only a certain amount of time too that they allow you to, let's say, lose your job even, if that makes sense, where they're like, okay, we only provide assistance for 1 year, but no, the company that I chose actually, it was 1 year, but then if you hadn't found a job again, they would have you reapply. So you would reapply and say, okay, I still need help. So that kind of thing. So you want to know, is there assistance with that as well? And then what I found out was that when I did call, that once you refinance, you lose your standard federal deferment or forbearance. So those things where you're like, okay, I go into, I start school, I decide to go back to school, and you can actually put your loans in like a deferred or forbearance status. When you refinance your student loans, you cannot. So be mindful of that, okay? And so you also use you lose your income-based repayment status benefits as well. So all those things that come with the forbearance, deferment, also the loan forgiveness. You cannot do loan forgiveness. They call it the PSLF program. You lose your loan forgiveness and your income-based repayment status benefits. But of course, once again, this is with the particular company that I chose. But that's something to ask, okay? The point is to get your brain to be like, okay, so I need to ask about this. Do I still have these benefits that I would have with those federal student loans, okay? And then, of course, the next one is actually the third-party billing department. The company that I was with now has changed to a third-party billing process, but it was more to be able to provide different ways of payment for their customers, right? But at the time, I loved that the company handled their own billing process. I didn't have to reach out to anybody else and be like, hey, can you help me with this? It was just like you called and they could help you they can handle the entire process, okay? And that was a perk. So you didn't have to reach out to that other company. And so yes, the company that I chose did change to this third-party billing, at least, and actually it was within the last like 2 years or so, but before that they handled all of the information, okay? And you know, sometimes that's nice, right? You call and you know they'll be able to handle the entire process for you, okay? Okay, now the next one is, and maybe this should have been earlier, but sue me. Is there an option for interest rate reduction, okay? So, and what's the process, okay? So, I mean, closed mouths don't get fed, okay? Seriously, so ask for what you want. So you're looking for interest rate reduction, have them tell you how that works, okay? Have them tell you how that works. So an interest rate reduction with the particular company that I chose, they would reduce the interest rate by 0.25%. And I'm spitting on myself. If you opened a checking account, okay? So I went with a bank. So they said, if you open a checking account and transfer your money from, in my case, Chase Bank to our bank, and then allow us to pull that money from our own checking account, we reduce your interest rate by 0.25%. Okay, so does that make sense? So you literally just go and make a checking account with the bank in this particular circumstance. In my circumstance, I made a checking account, and then they say, okay, well, now connect it to the bank that you're moving the money, transferring the money from. And then they actually send a few small payments over there to make sure the process works. And then what I would do is that when I was ready to pay, I would send that dollar amount, which in my case was $800, so the dollar amount to the checking account. And it would usually take about 2 days to get there. So then I had to remember though, okay, they pulled the money on the 9th of the month. So that money had to be in there for by the 9th. And usually they give you, let's say, a few more days, like I want to say like 3 to 5 days. So they would continue to try those few days if the money hadn't gotten to the account yet. But then they would then remove that money from their checking account and apply it to the loan, okay? So that's just a way that I was able to get 0.25% reduced on my interest rate, okay? So you want to ask, can they give you an interest rate reduction, and what is the process for that, okay? And you also want to know, can I pay additional payments? Because there are actually some, like let's say mortgages, where you can only pay a certain amount of additional payments per year. So they literally cap you. They say, okay, you can only pay this many $1,000 a year extra on this home, okay? So you want to know for the student loans, you're like, hey, so I'm able to pay additional payments, right? And I want to say for the most part, you usually are. I can't say that I found a company where they said you cannot pay additional payments, because actually in like the housing industry, they have some instances where you pay additional and you get penalized. So in this case, can you pay additional principal payments on your student loan? And so in my case, I could go into the bank's website and literally say, I want to pay, okay, but then I have to remember though, I had to send the money from my Chase account to my checking account, you know, so there was a process. Could I have called? Probably. But sometimes you're just like, okay, it's after hours, I'm doing this at random times, so sometimes online is really the most flexible. So I send the money from my Chase account to this banking checking account, and then I go into that checking account and I say, okay, I want to apply this $2,000 to my student loan. And you basically say exactly that. You put in from this checking account to my student loans, and make sure I list it as principal payment. They're going to have several options. They'll have principal payment, they'll have as a regular payment, so be mindful of what you're applying it to, okay? And you want it to say principal payment. And usually I go in there and then you press principal payment. Usually it took, I don't know, 24 hours or so to apply it. The next day I would go back and I would say, okay, did that $2,000 get applied to the principal payment? So I could see that amount go down, okay? So that's very important, because you'll be paying wanting to pay very large principal payments. So this makes the balance of the loan go down much more quickly rather than just when you pay your regular payment. Because remember, when you pay your regular payment, a portion of that goes to the interest and the rest of it goes towards the principal, which is usually not that much. So that's why you want to go above and beyond to find extra money in order to apply it to the principal payment. And you want to know, will that company allow you to pay additional principal payments? Okay? So also now, do they have to pay application or origination fees? So really it's at the beginning. You want to know, okay, does it cost money for me to apply? Which, you remember in that 877 number, they wanted $2,000. I was like, homie, no, not happening, okay? So most of these companies, that's usually how you know it's legit. They're not asking for any application or origination fees, okay? Because you should not have to pay to refinance, all right? And then, so that is really the meat and potatoes of what we're talking about today, guys. So you really want to decide whether refinancing is right for you, okay? So I know that since 2015, the interest rates have changed, and there's so many things that are different than before, right? But the refinancing, you at least want to give yourself the opportunity to take a look at, could you benefit from it? Because if you're still carrying interest rates from school that are 7%, 9%, whether they're private loans or federal student loans, Like, you really need to go and see, is it possible for you to refinance? I was like, my hairstylist always says, don't count yourself out. Don't just say, oh, there won't be anything available. Oh, it's this kind of loan. Nobody will know what I'm talking about. There can't be anything available for this. Go and see. So, and then also it's important to remember too. So I know a lot of you guys know about that when you apply to these, they do take a look at your credit. But if you apply to all the ones that you want to apply to, I mean, honestly, apply to maybe 2 or 3, okay? But when you apply to 2 or 3, it will hit your credit. But it'll be called a soft pull. So if you do them all within 30 days of one another, it'll be considered a soft pull. So basically it won't hurt as badly, okay? So you'll have that soft pull on your credit because they'll be looking to see kind of, okay, where your standing is, things like that, okay? I'm trying to think of what else. So make sure that you're looking at the reviews. See the other things that we talked about. Looking at the reviews, the company's reputation. You want to look at the customer service. Who can you actually talk to? And what hours of the day are they available? Because, honey, I wanted to call all the time. Like, okay, I have a question about this. I would have called you at 3 a.m. if I had a question. But see what times they're available, okay? And looking at your interest rates, looking at can they give you an interest rate reduction, looking to see what happens when you have loss of employment, and then can you send additional payments? Is there an application or origination fee? So have all of these things, really have them written down. So every single company that you call, which should, don't go overboard, 2 or 3 companies. And I think I applied to 2 of them because I wanted to see, okay, is it apples to apples? How close are they? What are we really looking at? Are the rates better at one company than the other? Are the reviews better at one company than the other? So, and I'm like, in my circumstance, I was like, okay, they said that they switched from this company to this other company. So I'm like, I just need to start with the right company rather than trying to switch 12 times. Because it's a little paperwork, it is, but they make it pretty easy because nowadays it's really like, so when I was in Orlando, I could easily just, they asked for like your license number and they wanted access to the loans, all the loans that you wanted to refinance, that kind of thing. But then when you got home, you could actually take pictures and send them online, and you could call if you needed to. So I would call and say, hey, do you have a status for me? Because you could really just take pictures with your phone and send them, and they were cool with that. It wasn't like you had to fax, you had to scan to email, those kind of things, okay? So these are just a few things to keep in mind. Wow, it's been about 30 minutes already. So if you guys have questions, feel free to leave them in the comment section. Since I was not able to go live, all of my electronics were going haywire, okay? Hope you guys have a good Wednesday. Bye.